Well, welcome and thank you all for joining us today. I've worked in private equity and wider private capital markets for more than 2 decades. And I can say that over that time, I've seen the industry evolve through globalization, new strategies, new regulations, new capital flows. But I can say with confidence that I've never seen an inflection point like I've seen today with AI. And private capital has always been built on really relationships around judgment, around experience. And those foundations will always remain the same, but it's really the way that we manage them and the way that we scale them is fundamentally changing. AI is not replacing how private capital works, it's really reshaping it. So my name is Rudy Saad. I'm the global head of private equity and private capital markets at Intap. The firm is headquartered in Palo Alto and we're listed on the NASDAQ. We're a market leader in applying AI-powered solutions to financial and professional services firms globally. We're very pleased to partner today with Alpha Alternatives. It's the industry leader in delivering operations transformation and technology enablement solutions to the private markets investment industry. Today, I'm joined by Travis Broad, who is the senior partner at Alpha Alternatives and who leads the front and middle office EMEA practice. Travis brings a practitioner's perspective on how firms are operating today. And also, I'm joined by Raphael Sachs, who is our senior value engineer in business advisory at Intap. Raphael works directly with private capital firms to help quantify the business value. And he shares today how advanced relationship management translates into measurable outcomes. Together, we're going to focus, the three of us, on really the future of work in private capital, its convergence with AI, and specifically what it means to go beyond CRM and how relationship intelligence is being redefined. Now, there are ultimately broad areas of AI that is impacting private capital markets today. What are these three broad areas? The first is relationships, be it to source investors, source deals, source exits. The second type or category is more in the quantitative analytics, be it to run financial models, a time of entry, a time of exit, also to help report NAV and other KPIs of portfolio companies during the holding period. And the third type is more qualitative insight, the ability to ingest due diligence material to determine market trends and how competitive is the company you're targeting. Now, across all three categories of AI in private capital, the objective is fundamentally the same. It is to help private capital firms achieve their dual objectives of maximizing return while minimizing risk. But for today's discussion, we would like to focus specifically on the first of these three types, around relationships, around CRM, and what does it mean to go beyond CRM in the private capital context. So let's step back very briefly to look at, where have we come from, where are we now, and where are we going? In the early days, CRM was basically human. It was the partner's memory, the Rolodex on the desk, the notebook in the drawer. But we then had an evolution of CRM platforms that enabled these companies to start tracking and logging their contacts electronically. But let's be honest, they were effectively electronic filing cabinets for a wide range of sectors. When you fast forward to today, and ultimately Intap transformed the private market CRM industry with DealCloud, CRM became a lot more industry specific, a lot more purpose built for private markets. For the first time, be it fundraising, deal sourcing, exits could be originated and also managed through a pipeline that mirrors how professionals work day in and day out. And not only captures who you knew, but also how you work. And that's quite important. So going forward, we're very excited to discuss with you the partnership that we have with Alpha Alternatives, the new era of AI, and how that is basically transforming CRM from being more of a static type data set into a more dynamic system that integrates firm data, integrates market data, services patterns, and ultimately helps firms analyze their relationships across deal making, be it raising capital, deploying capital, or exiting capital. And so with that, I'd love to hand it over to my my colleague, my partner, Raphael, to take us through what that means in more detail.
Thank you, Rudy. So with all those industry dynamics and evolutions in mind, it becomes a question of how are you going to evaluate what solutions and technology you can adopt, and that's what I want to cover next. Is really a framework for assessing potential solutions that your firm might use to keep up in this evolving and very competitive market. We even published actually separately a few months ago a sample RFP. So for a very formal evaluation process, you could even use that as a starting point. But I want to focus on a few categories here. The first is functional requirements. So this is features that will help the deal teams. Is this giving them relationship intelligence? Is this infusing AI into their workflows? And is this really meeting them where they work in terms of mobile, email, other apps that are their day to day? The second is more for the IT audience, and this is the ability to help IT innovate and drive value for the business. So issues of configuration, speed of configuration, and ease, how much comes out of the box versus the lift that IT may have to do beyond that. And of course, InfoSec and performance and things like that will enable IT to have confidence in these solutions. Now, the third is who is the vendor? In this market, it's of course important to understand who are you doing business with, and that's no different when choosing a technology provider. You're not just buying a product, you're buying a partnership, and it's important to understand who is on the other end of that and who are you exchanging money and therefore value with. So the track record in the industry, the size and stability financially and reputationally of the firm you're going to do business with, extremely important to consider when evaluating who to work with, who to partner with, and who to buy technology from. And underpinning all of this is, why are we doing this at all? What's the reason to move away from whatever status quo and whatever technology we're using today? And is this worth the investment that we're considering making? So if that's not answered, then the first three categories are irrelevant. You need to understand why you're doing this in the first place and what is the transformation that you're after. So I want to double click a little bit on some of the business outcomes that we typically see private capital firms pursue when they're evaluating solutions in this market. So there's typically five. Things are a little bit different for every firm, but we would submit that these are the typical ones for the average private capital firm. The first is around the network and the relationships. And this typically maps to more of the common CRM use cases or kind of old school CRM. But what we really need to do is go beyond just data entry and tracking what meeting happened in the past. This is about how do we expand the size and strength of the network that the firm leans on, and who knows who best? What intelligence can we glean from the past interactions, the past deals we've done with other entities in our network? The second is more on the fundraising and IR side. And it's also, like Rudy said, a relationship-driven industry. So how are these tools going to help us manage the relationships with investors, keep them interested, keep them happy, and ultimately drive better fundraising results? Sourcing-wise, it becomes a question of how we're going to continue building pipeline and ultimately capital deployment. So this is both quantity and quality of how many firms are we reaching out to, how many firms are we actively talking to, managing relationships with, and promising companies that we may be interested in investing in. How are we going to ensure that we're not missing any deals and missing any opportunities? And the last two are more around speed and efficiency. So once a deal is in the pipeline, it's how are we going to execute? How are we going to automate certain tasks, make things faster, ensure that deal velocity is as fast as we can possibly make it to get to that close? And then the final is just efficiency. What are the main ways that a solution may be able to automate routine work, save our people time, let them repurpose their time more to high value work, to working on their relationships, their sourcing, rather than manual data entry and, historically things that are associated with CRM and technology. And we firmly believe that the market has moved past that. And, to stay competitive, firms need to be thinking about these future outcomes, about why are we investing in certain technologies, and are our choices out there in the market, are they going to enable us to compete? So that's a framework I want to recommend for pursuing technology choices and valuation processes. But I want Travis to bring this to life a little bit in terms of what he's seeing as DL and IR professionals are going out in the market, and what is helping them in their day to day. What are they looking for, and where is the market going in terms of the desires that these teams actually want in a technology solution?
Cool. Thank you, Raphael, Rudy. So I wanted to, like you say, turn this into a real example. So the way I see this is um, the capital raising processes are simply speeding up. The range of products is increasing, and the optionality for the LPs out there looking to deploy their capital is increasing exponentially. So it really is down to really improving that IR experience and making sure that we can provide them as much information as possible when they're looking for it. So in this context, what I'm looking to try and envisage is, most people will have been to sort of private markets focused conferences around the world where you'll have effectively beauty parades of GPs and their booths lining exhibition halls or waiting for LPs to come and book some time and speak to them. Now, in preparation for these events, historically, you could have spent a lot of time putting together sales packs or IR packs for each of the different people potentially attending the conference and hoping to have them available. But really, as we look towards that automation and technology provision aspects to it, what we're really hoping to get is for a tool to do that for us. So you're looking to have all of your interactions, your notes, your current relationships, the LP invested products, all of that in one place, so that you already have it to hand when you start those conversations, and you can bring something up on your iPad to start looking through it. The next step, once you've got your view of the context of that investment, once you know where your relationship with them is so far and you've got a good view of the intelligence with them, then you can start thinking about any other aspects you can lay on around the knowledge of their portfolio. So where have they found risk? Where are they adverse to it? Where are they regionally interested, for example? And just making sure that those interactions and summaries are really available to you as you start looking towards those conversations. And the last thing that people start to do in this area is start thinking about the awareness and about the industry. So really keeping up to date about market movements and applying that market industry trend analysis to the clients as well. I think when you gather these all together, you're effectively looking at a full briefing pack that's been collated for you, effectively looking at a dashboard for a single investor where you can talk to them intelligently and informatively with information around their portfolio and around their interests, summarizing those types of conversations. And we really look forward to where AI is going to work for us in the future. That's the world we're looking at, where we can effectively market our products and market our opportunities to these investors at the right time with the right amount of context that can potentially follow up later. The last thing was be taking out those notes of meetings, taking out the assignments from those as well, where we will be summarizing actions, documenting sort of follow up materials, charting follow up emails, and setting reminder workflows to be able to chase up on these opportunities. Those are the types of areas where we really expect the LP market to be transformed when we start looking at that investor relations lifecycle. Rudy, is there anything you want to add on this area as well?
No, sure. Thank you. Thank you for that, Travis. I would say that the complexity and scale of fundraising has fundamentally transformed. And so when you think about the wide variety of private capital strategies, be it from traditional private equity, buyout, venture capital, all the way to secondaries, private credit, GP staking, and so on and so forth, the IR professional is now juggling not one or two asset classes, but several asset classes simultaneously. And when you layer on top of that the additional complexity of dealing with not only institutional investors, but also the rapidly growing private wealth segment as well. And the impact, the importance of CRM in private wealth is actually more pronounced because you're aggregating hundreds, if not thousands, of tickets that are relatively small, but of high volume. The third dimension to this is you're also raising capital as an IR professional, both directly from institutions or private wealth, but also indirectly, be it through placement agent, through distributor banks. So as you can see, the complexity of capital raising by way of strategy, by way of type, by way of channel compounds And technology and advanced CRM, purpose-built CRM becomes absolutely necessary to manage that complexity and scale and grow. Back to you, Travis.
Thank you. So we've looked a little bit around the investor relations side. So now we just want to pivot a little bit to the investment side. So obviously we will always be looking at that capital raising activity, but for us to be able to effectively go and raise more capital past the first fund, you need to be able to deploy it correctly as well. And there's no sort of shying away from the fact that that deal market can be quite competitive sometimes. So how do we add that competitive advantage? There's a few different areas we've sort of identified that, again, will really drive that next level of the investment management process. And this is really, investment management teams and deal teams are often the hardest part to penetrate when it comes to trying to drive adoption for technology because of the fact they've often got years and years of experience in managing things their own way. But these are the areas where we can start adding value using the AI enablement of these platforms to be able to sort of assist in that process and drive the value creation used in technology as well. The first area was that we try to look at here is around deal origination. So really just using technology to narrow the pipeline of possible opportunities out there. So thinking about where you really should be prioritizing your time when you start evaluating deals, identifying where they've come from, weighing up the strength of a potential opportunity versus where the source of it, and understanding where the relationship was for the people suggesting it. Obviously, as you get more and more track record with these implementations, that relationship intelligence base of data will increase, and you can really start getting to trust the areas where you're receiving the best amount of deals as well, and understand the performance reporting that comes from them. Getting down to that layer of deal scoring is going to be incredibly important because, as Rudy suggests, the complexity around your strategies is going to be becoming increasingly more and more complex. So we have to be able to start thinking about the allocation methodology as we approach these types of deal life cycles as well, and just trying to simplify the data flow there. So we are reducing the amount of time it takes to process the deals that we really want to pay attention to. The middle area is really thinking about that deal management. So trying to identify those critical deal points and red flags in real time. So be that lulls in communication, be that gaps in information, missing data on submissions, for example. We really want to make this a live collaboration process as we start thinking about the roles of the deal teams working with partners as well, and trying to make sure that the adoption increases and it keeps increasing, identifying workflows to be able to follow this as well. So really just trying to make sure that the processes moving from that originator stage through to the investment committee works at a steady rate, and we're able to keep that deal flow going and identifying issues where they come from. And the last thing is just really thinking about the approval aspects. Now, the investment committee memos are historically one of those areas where they are typically going to be excessively large documents taking a significant amount of time to prepare, and there's often been a bit of a historical reticence to try and rectify that. But effectively, trying to get down using the source documentation and building out automated IC memos is going to be the next phase in this evolution of the journey, because we have to be able to simplify that process and use trusted source data coming from a single source of truth to be able to generate those IC memos in real time. And using this technology to track those through not just the process of the deal management itself, but through to the approvals of the IC is incredibly important, because obviously all the downstream impacts will then take shape from there once that IC approvals come in as well. So when we think about the life cycle of this, we're really looking at that sort of front to back view of how do we find the best deals, nurture them throughout the life cycle, and then get them to the point where we can invest while making sure we're maximizing efficiencies all the way throughout. So Rudy, anything you want to add to that?
No, thank you, Travis. I think you summed it up very well. The only thing I would add is that the investment environment has never been more competitive than it is today. The amount of dry powder chasing deals today is unprecedented. And again, you're trying to not only originate deals, you're trying to manage them through the pipeline, and then you're trying to collaborate on the ones that are shortlisted. And the method of originating transactions, be it proprietary transactions, direct or indirect through coverage, intermediated through banks effectively, is becoming more and more competitive and more challenging. And it does not stop at the time of acquisition. After you acquire a company, oftentimes you're also trying to originate transactions for add-ons, tuck-in acquisitions, mergers and acquisitions during the holding period of the particular asset. And then lastly, at the phase of exit, you're also trying to source the best way and the most opportune way to exit your transaction. And you're trying to manage a pipeline of potential financial buyers as well as potential strategic buyers as well. And these processes, they cross both internally within the firm, that process of going from initial IC to interim IC to final IC. It's a very rigorous internal process that the deal team needs to go through. In addition to the external process of adhering to an auction process, be it getting SPAs signed, lining up the leverage to transact, lining up co-investors. So as you can see, the process is heavily intense over a short period of time to triangulate both internal and external processes throughout the entire investment divestment cycle. And this is where these systems, these purpose-built systems, these industry-specific systems come to play.
Cool. So I think, yeah, just to sort of wrap that up and hand it over, I think, and one of the other sort of items that we did mention was just around the, complexity of the asset classes we're bringing in effectively drives more and more complex allocation policies, which you're going to need to be able to handle at this support of entry. So again, this is just what these key areas that the complexity of these portfolios will drive further enhancements. It's just going to be more and more for us to manage in the future. But that's just a brief view, and now I just want to hand back over to Raphael to talk through the life cycle in a bit more detail.
Thank you, Travis. Very, very helpful. I want to just ground us as we're wrapping up on the full life cycle. And I know Travis took a deep dive into the deal and IR personas and what kind of things they want to see and how technology is really modernizing their workflows and their day-to-day. But just zooming out to really the full life cycle in this market and where we think that technology is able to have that impact, this is exactly what Intap is focused on. And, from the beginning to the end, like Rudy was talking about exits, it's really about ensuring that the solutions are driving you towards measurable and positive business outcomes for the firm. So from relationships to fundraising to actually finding, executing the deals, and then holding the portfolio companies and finding a profitable exit, Intap is laser focused on taking firms on this journey, giving them a private capital specific solution that comes out of the box with so many of the amazing capabilities that we believe that we've built and that the market has trusted us to build and enable them with. And just having a data and AI specific foundation to underpin all of that. This is what we're proud to do and support many of the market's leading firms. And both Intap and Alpha Alternatives, as Rudy has said, are credible and experienced leaders in this space. And we're excited to continue building and stay on the forefront of this market. So with that, I think we should open it up a little bit for some Q&A and see what the audience would like to hear a little bit more about from us.
Yeah, and I just want to mention for those that are joining us today, if you have any specific questions, you can put them in the chat and we'll have our experts answer them. We have a couple of questions that have already come through. And so the first question is, how does CRM or selecting technology impact a small firm versus a large firm? Because obviously there's big differences in how you would scale there. Are there any thoughts on that question?
I'm happy to start, and I'll get some thoughts from the rest of the panel. So, really, it's going to come down to the complexity required off the shelf. So, a small firm, early in its infancy, first or second fund, will be looking for some structured way to be able to store data and effectively move themselves away from Excel. So, they're thinking about how can we make this transition as easy as possible. They're also not looking at needing serious deal complexity, typically not going to be looking at multiple various asset classes or regional team different nuances as well. So really looking for that off-the-shelf plug-and-play type solution. The larger firms then obviously that potentially have been operating for a few years and come with it a little bit of organizational debt as well, and potentially looking at how can they manage their regions and teams more effectively. And that sometimes comes either with compromise or the need for some ability to customize at source when it comes to the capability of the system as well. So the flexibility of the platform then starts becoming more of an ask, and the need to be able to customize that user experience by persona as they move through. And that's obviously affecting that view of the data as well at those levels as well. But I'll also pass to the rest of the panel.
Yeah, I definitely agree with Travis. For the larger firms that have scaled, become multi-strat companies, global companies across asset classes, AUM has been scaled, but the operational complexity in terms of data, in terms of process, in terms of people, has grown exponentially against that growth in AUM. And so as a consequence, it becomes very challenging and start getting diseconomies of scale if the fundraising processes that initially led to the company's success become inefficient, or if their investment processes become more and more inefficient. And so how can you continue to scale and manage a global company, global platform, and connect all the right dots across these different deal teams, across these different fundraising teams, and ensure that that complexity does not start become a hindrance to the organization? And then on the other side of the spectrum, the smaller firms and more specialized firms, the boutique firms, are looking to future-proof their business today. It's much easier to find and onboard the right CRM process from day one. And we've seen many of our clients scale year after year with that platform. And so the ability to get an off-the-shelf solution that already codifies best practice that has been perfected with the largest firms in the world right off the shelf from day one is a massive advantage, and ability for these smaller firms to lower the barrier to entry and scale faster.
Thank you, Rudy. Thank you both. So we have a question from Jose. Couple questions coming in. So the first question from Jose is, can previous IC memos be uploaded to DealCloud so it generates new memos using specific templates?
Yeah, I'm happy to speak to that. Thank you, Jose. So yes, document ingestion is something we're very focused on, but even a couple of years ago, before this latest hype cycle of AI, we've already been in the business of templated reports and IC memos. So there's a lot that we do with DealCloud to help manage the investment committee process. I think part of it is notifying people to vote, documenting how they voted, the reasoning. All of that becomes data to help inform future processes and to have that on the record of how that IC committee went. Now, as far as the actual templates, building any sort of template report in DealCloud and then, populating it with whatever data fields you have in DealCloud, that's bread and butter. That's something that people do without coding in Word, in PowerPoint, in PDF format. Whatever you want to build in terms of a report, any business user can do that and then have this auto-populated based on fields in DealCloud. And for the IC memo specifically, you can have them distributed automatically and give emails and notifications to the relevant people. Based on the tasks that have been assigned to them, based on the timeline or the deadline of the IC, you can actually send those reports to the relevant people, get the votes. And we've seen a lot of clients very happy with managing most or all of their IC process directly through DealCloud and having all of that recorded for posterity for future ICs and for learning.
Thanks, Raphael. We have a question that came in from Rob. Can you speak more to LP briefing packages and dashboards you mentioned and how those can be achieved with CRM when data may be scattered across many sources? Travis, I think you have an answer.
Yeah, I'll start off with that one. So the short answer is the data's got to be available somewhere, right? But in reality, we're thinking about you're about to meet an LP and you want to bring up the profile of where they are already. So the data's got to be somewhere accessible. Now, the power of these types, the power of any CRM is going to be down to the enablement of it and the data available in it. So I think, as Raphael talked about, the hype cycle for AI is coming heavy and fast. But the first thing people are realizing is they've got to provide the data to be able to ride the AI wave. And that's the first problem they're trying to solve then. So obviously the data's got to be available for where people are looking to access it. However, there are going to be a variety of ways to be able to consume documentation to get to that point as well. So I think it's just important to note that there is no world where we can simply provide data out off the spot, but the future CRM is where we're going to be pulling data from multiple sources into those dashboards and be able to produce them from there. And Rudy, Raphael, I'm not sure if you want to take that more further.
Yeah. Just to quickly weigh in there, many clients will integrate with a data room or other source of truth around LP data. But going back to the question about the templates and the IC, all of this is on demand. If you're going into a meeting, you want it printed out, you want it on your mobile app, whatever preparation and briefing packages you might want for you internally to prepare for that meeting, that can be on demand. And then if you need something external facing also generated, that's also something DealCloud can do without coding. And we think that's very important. I think many competitors, it takes a while to produce these templates and to populate them and to iterate on them. And we think that's a very important value proposition of the business users who know Beth. What do I need in this report? Which fields are important? What do I care about? What needs to be on page 1 of that tear sheet report when I'm going into a meeting? And that's what we deliver.
Thank you. All right, we're going to keep going with our questions. We've got lots of good ones coming in. We have a question from Louie. Do you think AI will lead to more standardized reporting across the PE industry or more customization for LPs? I just lost it. More customization for LPs. Will a compromise be struck? So a little bit building on the last question.
I'm happy to address this question. So there are regulatory requirements for what GPs report to LPs. And these are increasingly being pushed by groups, important groups in the industry like ILPA. But also they're defined by the LPAs and the disclosure requirements of the definitive agreements that LPs and GPs enter into. So that kind of converges the requirements into more standardization. That's the push towards greater standardization as a consequence. And the trend, directionally speaking, is towards greater transparency and greater visibility. The second aspect is on the other side, you have increasing focus for a lot of the LPs to increasingly take on more of a direct role. We've seen a lot of the large sovereign wealth funds, a lot of the large asset allocators increasingly go direct or co-invest alongside their investors and therefore have a seat at the table and have a different customizable type of reporting as a consequence. And we've seen hybrids and variations between these two ends of the spectrum in SMAs, separate managed accounts, where they're typically highly customizable and typically for very large accounts. So it can drive both effectively. And the AI should be able to enable both the customization as well as the standardization. The standardization is a fiduciary duty for all LPs to have the same amount of information on the one side, and on the other side, the importance of customization for more bespoke fund of one type constructs as well.
Thank you. All right, we've got a couple more. Thanks everyone who is staying on and listening. We have a question from Paul. Multiple parties contribute to IC process. How easy is it to give external stakeholders, i.e. M&A, legal, co-investors, access to deal or IC processes, accepting that documents will sit in a data vault? Key here is being a party to workflows and process dashboards.
Yeah, you definitely can do that. I think the tolerance for having an external party have a login to your DealCloud, that's up to your firm. But the permissioning that we have is very much strong enough where you could do that. Really down to different dashboards or workflows. You can set who can read, write, download, upload all of the different relevant data fields or dashboards. So if you're willing to do that, you can very much wall off whatever you want that external party to see, and the rest of your Deal Cloud instance and all of that other proprietary data they would not have any access to.
Thanks, Bob. Yeah. Okay, one more that has come in from Ami. How can AI-powered solutions help private market firms not only manage relationships, but also anticipate client needs and unlock hidden deal opportunities, especially in a space where data is often fragmented and unstructured?
I'm happy to
Yeah.
take that initially. Um, the ability to go direct is highly prized by private equity firms. And the reason for that is auctions inflate the price. And so the ability to originate deals in a proprietary fashion, direct from sellers as the first institutional capital, the ability to originate these transactions is fundamental. That said, the ability to get signals as to what is the likelihood or what is the predictive ability of a transaction to be made is also paramount. It's something that we focus on as well through signals. The transactions typically occur when you have events like family succession, events like a default on a loan, a change in management. All these typically signal that a potential deal could be made in a proprietary setting. And the other aspect, of course, on the intermediated side is looking at ensuring that the advisors and the coverage bankers are sufficiently covering you as a client for these opportunities as well. So the predictive capability comes more from anticipating what are the typical type of events that might make a deal happen. But maybe I'll ask Raphael to speak to some of the origination and signal capability we recently launched.
Sure. So, yeah, I think what's very important here is the ability to have private markets data that keeps you up to date on potential opportunities. So, we do this in a few different ways. One is, we have partnerships with PitchBook, Preqin, maybe a dozen or so other data providers that you can sync into your proprietary history with a company. So you have up-to-date centralized information about private companies that may turn into a deal. The second is around actually what's your ability to search through potential targets for acquisition or another deal structure. So we've launched as part of our AI offering what we call origination. And what this basically is an AI-powered search of, based on the criteria that you input, it will not only, your third-party data subscriptions like a PitchBook, but we also have our own proprietary private markets data set called Intap Data. It's an absolutely massive database. This is part of an acquisition we made of a German AI company called Delphi. And what we believe is that, you can gain a competitive advantage by having this proprietary data source. You can use AI to comb through it and find potential opportunities that your competitors may not have. And then, of course, to wrap it up, you can then use some of our further AI capabilities to generate that outreach, manage these potential leads, and ultimately build a wider but also more relevant funnel to the firm and the type of investment you like to make.
Thanks, Raphael. All right, Rudy, that's it for our questions. Do you want to close us out?
Sure, Megan. Thank you. Thank you very much. Just to conclude, relationships matter, clearly. But the old episodic way of managing the relationships really no longer cuts it. Generic CRM systems, they were helpful for a while, but they don't cut it either. The future is with industry-specific, purpose-built, vertical AI platforms that they specifically target private capital and its various types, from private equity, venture capital, private credit, secondaries, GP staking, that are also built around the journey of an investment professional, around the journey of a fundraising professional. And to Raphael's point, ultimately fueled by both proprietary and third-party data. And that's what we mean by going beyond CRM. And with that, I wanted to thank everyone on the call for joining us. And please do not hesitate to reach out to us directly should you have any further questions. Thank you.
Great. Thank you.